ownership. And that's what we're going to talk about today. So one of the first things that we want to know about keeping the dream alive is equity. When you own a home, it builds equity, and that equity helps to be an investment to you so that it's money in your pocket and an advantage to you later down the line as the longer you keep the home. It builds wealth. It helps with tax benefits and reduces bills, and it helps to build your credit along the way. One of the first things that you need to do when you're getting started in a home buying process is make sure that you plan for your money and you budget appropriately. And again, a budget right here is a plan for how you spend your money. And there are simple steps. You want to gather your pay stubs and learn how much you take home. So remember that what you take home is different from your gross pay due to taxes and due to insurance and things of that nature. You want to gather your bills and make a list of where you spend your money and make sure that you account for everything, because sometimes when budgets are really tight, you need to account down to the last penny in order to make sure that you are truly prepared and you're not forgetting anything. Subtract your expenses from your income, and then you end up with whether or not you have a savings or a deficit. Steps to establishing a spending plan. So again, determine your income, which is what we just went over. Your net income is how much you take home each month after taxes and after deductions. And you add any other money you receive, such as your child support, if you have any side jobs or hustles, because some of us have that. If you own a business outside of work, all of those things count. If you get income from a spouse or a divorce or anything of that nature, or even if you get any form of Social Security, all of that counts as earned income. You want to calculate your monthly expenses the way that we just talked about. And remember, an expense is anything that you spend money out on. So as we go a little further, you'll see that there's a budget that we have, an example of a budget, and I'll go into that more. Include the money you pay out for rent, utilities, car payments, credit cards, all of those things. And then use your actual bills to make sure that you are accurate. And make sure that when you make this budget, you don't want to do it. You might want to go month to month, but make sure that you're including the differences in the calculations, because we know that like in the winter, our gas bill could go up. In the summer, our water bill could go up. So make sure that when you look, you kind of plan ahead and you understand what those numbers look like in the long term so that you can account kind of for the whole year and not just for the here and now. And then subtract the expenses, your monthly income for income, I'm sorry. The last step is to subtract your regular expenses from your net income, and then that'll leave you with the money that is left over. And if you have a deficit, then that's where you need to start planning and saving and paying down bills and debt, things of that nature. So this is your budget worksheet, and this is what it should look like. As I said, when we get into this section, these are just basics, your mortgage, your association fees. If you own a home, sometimes that's one thing that you need to look out for, especially when you're planning to purchase a new home. You need to make sure that you account for everything that may arise when you get ready to plan that budget. So as you're looking for homes, if you get to the state where you're in a place where you're financially stable and you want to go out and find a home, make sure that you understand whether or not they have HOA fees. Make sure that you know whether or not your home falls in the middle of two counties, because if that's the case, you might have to pay taxes in two different places. I know a couple people that have to do that, especially in the Frisco area. They have to pay taxes in McKinney and Frisco due to where their property lies. And so that's something that you need to look out for. If you get a condo, it's possible that you may have condo fees. And again, if you live in a gated or a nicer subdivision, then you might have HOA fees that you have to account for as well. But the other thing as you look at this budget is to make sure that you plan accurately for everything. So again, we know that maybe during the school year, we might not have childcare expenses, but in the summer, you may have summer camp expenses and things of that nature. So you want to make sure that even in those crucial months where you might have more out of pocket, you're still able to account for the funds that will have to go toward a home. So now to your credit, good credit or bad credit. Well, I'll just say poor. I don't want anything to be bad. But poor credit can be a factor as well. So good credit it offers you low interest rates and it's an increasing asset. It helps you in the long run. Whereas bad credit is going to give you higher interest rate and decreasing assets. And if you have a higher interest rate, please know that that is going to make your mortgage payment increase along with any credit card debt that you have, or when you go to get your car, anything of that nature, your interest is going to be higher, making you have to shell out more money than save money. How to obtain your credit report and score. There are several ways. You can do it by mail, you can call in, and you can go online. These are the three major credit unions that you want to look for, and you want to try to make sure that you pull from all three credit unions. You never know which credit union a company is going to pick, and your score can vary because some companies may report to one credit union and not another. So you want to get a general synopsis of what your credit score looks like as a whole from all three. These are the numbers that you can you have in the email or I'm sorry, the websites that are available for you to look at for each one of those. But try to check those out. You can call, and typically you can request a free one every year. So if you're in the process and planning, then you can always pull from them and make sure that you have that information. There are two parts to your credit information: your credit report history and your actual credit score. Typically, your credit will track, like we said down here, for 7 years. That's normally how far back they go. Oh, my apologies. Oh no, I apologize. It's okay. There we go. As I stated, you can request a copy of your report from each agency every year. When you request your credit report, it will not include your credit score unless you pay a fee. Most of the time, there's apps that can do that, but you can pay a small fee in order to obtain the actual score. And look at some of your bank accounts. Sometimes when you log into your bank accounts, or if you already have credit card statements, they will have your score ready and available for you to see. And one of the things that's critical, if we go to credit cards and talk about that, your credit cards, well, we'll get into that, I think, a little later in the slide, but make sure that you check with any credit card companies you have, or even your car payment statement. Sometimes they will include your actual score from month to month within that statement that they give you, or within the billing information that they provide for you. Remember, if you have any bankruptcies, that typically last 10 years and before it's removed. But by the grace of the higher powers that be, whoever that may be for you, sometimes there are areas where it's been a long time and it might be helpful that you've made good payment history, and it may not affect you as much as other times. So this is just a reminder of what poor and great credit looks like. The numbers have changed over the past few years. So if you see, your poor credit would be a score between 300 and 650. Fair would be between 651 and 700. Good is 701 to 750. And great is 751 or higher, maxing out at 850. This is an example of why good credit is so important. If you see here, we have a loan amount of $125,000 with an interest rate of 3 and 6%. So if you look at the difference of your monthly payments, it's $527,401 for the 3% and $749.44 for the 6%. And that's a difference of about $200 and something. Over the course of 360 mortgage payments, you can see the total paid out for the interest rate of 3% and the difference between 6% here. And it's a difference of $75.92. It's a pretty substantial difference over 360 payments. That's almost, that's more than a whole another home. So if you think about it from that perspective and you look at it from home ownership, remember, it's one of the biggest wealth building tools in America. And so if you look at that difference, that's enough money to get you settled into a new home that you could be renting out and gaining profits from while you live in the home that you purchased. So make sure that you're taking good care of your credit and that you're keeping key eyes on what it looks like from month to month. So there are two types of credit. There is open-end credit, and it is extended on an ongoing basis. So that is normally like your credit cards, your cars, things of that nature. I'm sorry, credit cards, things of that nature. And then the closed-end credit is extended to a one-time limited basis, which is like your car loans or personal loans, things of that nature. Remember that with the credit cards, what I was going to say before is to keep in mind that with your credit cards, when I talked about that credit score, sometimes your credit cards can increase your rate automatically, or they can increase your interest rate automatically. So let's say you started out with a credit card that was about 3%. If you find over the next 2 years or year or so that you are falling into high debt and high rates, then that's going to increase your percentage of what the credit card charges you. So you want to make sure that you keep your debt low. And that's why I said on your credit card statements, you can find out what your credit score is, because typically those companies are tracking that from month to month because they can automatically increase it if you had a change in your credit history. They can increase, again, the amount of credit that is open or the line of credit that is available to you, but they could also increase your credit score, both of which, if they increase your credit score, that could help. If they increase your limit, that could help. But if you're overutilizing, then that could be a detriment to everything. So you want to make sure that you're paying attention to that statement. Improving your credit report, establishing a good credit history is actually pretty simple. You can open a checking or savings account and make sure that you maintain that balance. Make sure that you're not overdrafting. Make sure that you have consistent deposits going into that account. Because when you get ready to purchase a home, what's going to happen is they are going to pull those bank statements. And don't get crafty, because if you get closer to the finish line and you're getting ready to close, they are going to go back and check those bank statements. And they want to consistently see that you've had money being deposited into that account. You have accuracy in paying your bills. They're going to look back and make sure that you don't have overdraft fees or anything of that nature. And that'll help you to maintain a good credit report and score. And it will also help you to get approved for the loan. Apply for credit gradually. Remember that every time you apply for a credit card, it actually reduces your score. It doesn't take very long to build it back up, and sometimes it's just a general inquiry, but it still can drop your credit score. So if you apply for too much credit at one time, then that's going to drop your score significantly. And that's why when it comes to the home buying process, we want you to have everything that you need out of the way, except for the home itself. We have seen too many situations where people run into last minute purchases and they think, oh, I'm about to sign on my home. I got a little bit of money. I'm gonna go buy a car. And the very next day, they're not able to get that home. So apply for credit gradually, but make sure that when you're getting ready and prepared to purchase a home and you're actually in that process, that you try to spend little to no money, if at all possible. Don't apply for more credit than you can manage. Remember that I told you those credit card companies can automatically increase your balance. And sometimes people get happy about that and they want to use the credit and they can't really pay for it, or it's going to put their debt to income ratio off balance where it could affect everything in the long run. And so you want to make sure that when you look at your budget and you look at the credit that you get, that you don't overutilize it, that you keep it at a a maintain level that you can handle, and you want to make sure that your debt to income ratio is not off balance. So that just means that if you have, let's just say $5,000 worth of credit available, you don't want to overutilize that and have it sitting at $4,000 and you only have 1,000 left. You want to try to keep it around that 20 to 30% mark. And then that brings us to the last part of making your payments regularly and on time. If you have late payments, it affects your credit score if it's more than 30 days late. But with a lot of these credit card companies, and even with your home loan, if you pay past a certain due date, you're going to owe a fee, and that's going to take away from your money. And sometimes that fee can be significantly high. If you look at your credit card statements, if you have any, or if you don't have credit yet, then make sure that you're looking at things of that nature, because typically with credit cards, there are no grace periods. So if you're one day late, you could have a late charge of anywhere from $25 to $45, $50. And that credit score can sometimes often affect what your late fee payment is, sadly. It can affect that. So you want to make sure that you're making your payments on time so that you don't have any late fees. And if you make it too late, you want to make sure that you make it on time, because you don't want to have any fees or any late charges that are affecting your credit. Improving your credit report. Late payments affect your credit history, as we stated. Minimal payments are another trouble spot, because if you're making, let's say you've got that card almost pretty much maxed out and you're only making the minimum payment of $30, or we'll just say $100, right? If you're only making that minimum payment, you're still gaining a lot of interest and you're not helping yourself out any. So you want to make sure, like I said, you keep that debt to income ratio low. And you want to make sure that you're paying above the minimum payment as much as you can. Another good way to utilize credit is using it effectively. Determine how much credit you can afford comfortably, but one of the best things to do with credit cards is only pay your bills. If you know that you have credit, if you have phone bills and utility bills, you can set those up to come automatically out of your credit card every month. Make sure you're checking your statements, but as opposed to paying the money to the company itself, you can pay it back to the credit card. It'll automatically be paid off every month, and you'll still be gaining good positive credit. So what if you don't have a credit history? You can start to establish credit. Always pay your bills on time, like we said. Open a checking and savings account at a bank or a credit union. I like credit unions. They're pretty easy to work with, and they have a lot of great programs that help the underserved community. Banks do as well, but I tend to find that credit unions have them a little more. Apply for a loan using savings or collateral. So make sure that you're keeping your savings account padded. Apply for a limited use credit card, or apply for a loan with a cosigner. Now, if you find somebody to help you cosign, go for it. That's not always the case. So you want to make sure you're doing whatever you can possible to be able to establish all of this on your own. But if you have a spouse or a parent that's willing to help you, a cosigner is a great tool, but make sure that you understand that when you do that, it not only affects you, but it affects them. And so if you're trying to help yourself in a case of a cosigner, you want to try to help them as well and make sure that you don't affect their credit. There are some credit cards that you can apply for where you pay the money up front. So let's say you don't have any credit and you can't get approved for a regular credit card. You can work to save the money. So let's say you save $500. You can apply for that credit card using your own $500 as the collateral or as the down payment for the credit card. And once you get established, within a year or so of making timely payments and utilizing that credit card, then it can increase your credit score, and it can also allow you to get a better credit card. And that's it. The last thing that I would say is, in this day and age, we have a lot of things that affect us. We have a lot of stressors that take place. So lastly, it's not there, but just make sure that you're taking care of your mental health. We know that these are troubled times. We know that the world can seem chaotic at times. And so make sure that you're also taking care of your mental health, because it'll help you focus. It'll help you stay in tune with everything that's going on, and it'll help you to know that you can accomplish the goals that you put in place as long as you plan accordingly. Are there any
Awesome.
questions?
I didn't see any questions come through the chat, Nichole. That means you did an awesome job.
Okay.
Yes, this is such great information. Now, when it comes down to applying for a mortgage loan, do you see is there a certain credit score that a buyer needs to have?
The lower the score, it typically affects you. I mean, you can get it there in the day. There were programs right now. We understand that this political nature doesn't offer us as much in terms of programming, but as
Mhm.
long as you're in that 600, 650 area, seem to find that to be the average medium score to be able to get a decent loan and a halfway decent interest rate. But anything below that, I would start working really hard in order to bring
Okay.
it up. It doesn't mean that you can't, but typically 6 to 650 is a better rate. And also understand that when it comes to your credit score, it affects the type of loan that you get. So if you get a FHA loan, that's great for beginners. It's going to help you get your foot in the door, but you're also going to have that mortgage insurance added to it. It's a premium insurance added to it, and that could be anywhere from around $125 up to maybe $160, $70. Don't quote me on that, but that's typically like the average range that's added to your payment, because they see you as a risk. So when your credit score is low, that risk is going to, again, not only offer you a higher interest rate, but you're also going to have to pay for a special insurance that would take about 10 to 15 years to fall off. It depends on how fast you pay it down, but it will take a while for that to fall off in order to reduce your payment back down. Whereas if you had a better score, you could apply for a conventional loan that wouldn't have that additional payment.
Okay. That's good information there. Awesome. Um, so I guess this is it. I don't have any questions coming through the chat. Just trying to think of something off the top of my head that I know that we deal with on a daily basis, as HUD certified counselors. Um, I think the biggest thing is people wanting to know what kind of down payment assistance may be out there. And we held a DPA Expo in February, which provided lots of information. But again, like you said, in this political climate with a lot of stuff going on, I don't know if, I haven't heard too much about any special funding or different programs out there. Are those things still available, or are they just limited right now?
They're just limited right now. I will look on Wells Fargo's site. I can't remember the name of the program off the top of my head, but I know we went to a conference last year and Wells Fargo had some pretty good programming where if you just simply look at their map in your area, it'll list all the homes. And if there's a discount available, it'll tell you your income restricted level in order to receive that benefit. And it should help you from there. But there were some significant like drops in the price if you looked on their zoning map to see what was in your area. But that is income restricted. Remember, the higher your income, the less you would be likely to get any type of incentives of that nature. But if you are low income or moderate income, there are still some programs out there. And that's where the credit union might not be as helpful, because the banks do have money and they don't need as much funding in order to be able to offer you some of those incentives. They can offer it through their own programming and funding, and that will give you a discount. So for that, I would say look at some banks directly on their websites, but I do believe that Wells Fargo has an extremely good program if you check out their website.
Okay. Uh,
Unfortunately, at Mr. Cooper, we're not a bank.
mhm.
So we don't have as much to offer in that area. We do more absorption of loans and servicing and refinances as opposed to actual originations.
Okay. All right. That's good to know. Now we had a question to come through. Not sure if you'll be able to answer this one, but it said, "Can you explain the NACA program versus going through?" And Carol, please put in there. Are you saying versus going through Dallas Habitat? Is that a question for me? Can you explain the NACA program versus going through Dallas Habitat?
Mm, So we do work with NACA, but primarily for our modifications. So if you're struggling or if you've fallen into hardship and you're already a homeowner, then we utilize NACA in order to be like a middleman. A lot of people don't necessarily like to talk to the bank directly or the servicer directly because sometimes they don't trust us. So it's better to go through a HUD certified counselor for that. And normally when we work with NACA, it is because they are going through that counselor because they have faced some sort of hardship and they are looking to try to get into a modification in order to save their home.
Okay.
One thing that I will touch on when it comes to that, and this is just information that a nugget of information that I'm gonna drop. Remember that modifications are good and they're extremely good if you need them. But we find ourselves in a place now where the days of the interest rates of the 2 and the 3 and the 4% are past us. Doesn't mean that they won't come back again. But right now they are past us. And so modifications are not always to everybody's advantage in this situation because remember when you mod that loan, when you get a modification, you're actually signing new paperwork and it's almost like you're getting a whole new loan, which means that if you had an interest rate of 2 or 3% years ago, when you sign now, that is going to put that modification at 6 or 7%, and you're not actually saving anything.
Saving money.
So that's why we have classes like this because we want to make sure that you're prepared for the hardships. We do everything that we can to be prepared, and we hope that the powers that be open doors for you in order to make a way should a hardship come. But remember that the market can change like that, and sometimes the help that's offered is not actually better than what you already had.
Awesome. Yes, I can attest to that. And that's why we have these classes and we bring them to you for free because we don't want to just put you in a home. We want to make sure that you know what you're getting into because getting a home purchase, that's a large purchase, you all. And you're gonna have that in, like you said, from 15 to 30 years, just depending on the loan term. And we just want to make sure that you get in there and that you're able to maintain that home and spend many glorious years in that home with your family. So whenever someone's offering a free class, whether that's Dallas Habitat, whether that's another housing counseling agency, you all signed up for those classes. And that's why it's so important. And we're always, for our clients that are in our program, we're hitting on you hard. Join these classes. We offer these classes most of the time. This is a special event this week that we did, but usually our classes are Tuesdays and Thursday evenings from 6 to 7 p.m. Just an hour. We're just asking for an hour. This is the only way that you're going to get in that home and maintain it, okay, by getting the education. Our job is just to empower you with the information. And that's what Nichole is doing. And that's what you can tell she enjoys doing it. So we want you all to come to these classes. Like I say, you can't be free. So come to the classes. Even if you're not in our program, the classes are free. You just have to sign up, register and sign up. Okay. So I appreciate you all taking time out of your Thursday to come and sit with us and learn this information. Kudos to you all. This is the first step to being a successful homeowner. And Nichole, we appreciate you so much for bringing all this important information to us. The presentation was awesome. I would love to have you back again, maybe sometime in the
I'd love
fall.
to be back again. Thank you. I guess I just want to say this last part because I said it in the beginning, but this is my own personal testimony. I was scared to own a home. I'll be completely honest. I worked in the mortgage industry for years and I was scared to do it on my own. But when I got married, I purchased a home and we purchased, I don't know what year now, but we were able to walk away with a significant amount after we sold our home, close upwards of $300,000. So just remember that when you're going through the struggle, there is a bigger picture. And I told you in the beginning that it's one of the largest wealth building tools in America. Keep that in mind because sometimes it will get daunting, it will get stressful, but there is an outcome at the end that you're looking for, and that outcome can help set you up for retirement. That outcome could really literally change your life. That outcome could help pay for your kids' education. That outcome could help you in a very critical situation. So just remember that it is a really big advantage to you. And I sold my home after my divorce, but now I've repurchased and it has just been a blessing for my son and I. So keep that in mind that, there are
Awesome.
people working in this industry that have the same struggles or fears as you,
Yeah,
but
absolutely.
it all works out.
Absolutely, it does. You all can do this. Okay, you just got to stay on the course, and that's what we're going to do. We're going to keep advocating for you. We're going to keep being here for you and answering as many questions as we can. So we thank you all for your time, and just know that you all can get this done. We appreciate you all. Have a wonderful, wonderful weekend. If this is your last day in the office this week, enjoy your holiday weekend. You all be blessed. Have a
Have a
good
good
one.
one.
All
Bye-bye.
right, bye bye.